FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to the Financial Survival Network. I'm Kerry Lutz, and today is September 12th, 2018. Well, markets go up, markets go down, but Wall Street is forever. But what about cryptos? Well, we'll be talking more about cryptos shortly, but first, as always, invite you to be part of the show. Just send us an email, kl@kerrylutz.com. And if I like it, I'll read it. Hey, understand that we've got time constraints. Can't read every letter that we get, every email, but I basically try to get to all of them and respond to you personally. But if it's good enough, we'll definitely put it on the show. And the email address, again, for your reference, is kl@kerrylutz.com. Well, crypto markets. If you've been listening to Financial Survival Network for the past 7 years, you know that we are always on top of the crypto scene, what the latest trends are. You also know that we sent out an alert on December 17th, 2018, warning all of you to sell half of your cryptos, get rid of them, and wait to buy them back. As it turned out, the article was written on December 16th, but published on the 17th. We were one day off on the peak, but all you had to do is take a look at that chart. Well, cryptos, are they still relevant? Do they make a difference, or are they just a little niche trading thing? Well, we're really happy to have with us today Sam Shames. Sam, you are a lead trader at Simpler Crypto, and the place to go find out more about Sam and his organization, simplertrading.com. Sam, welcome to the show.
Hey, Kerry. Good to be here.
So, cryptos. Right now, I specifically got on the web and took a look at what the price was before I got you on the show. So it sounds somewhat intelligent, because it could be 8,000 one day and 6,500 the next. No one knows the difference. Right now, it's trading around 6,250. You seem to be of the opinion that 6,000 is a major technical resistance point and perhaps a major turning point for the cryptocurrency.
We do, yeah. So the 6,000 level on Bitcoin has been a key support level. The problem with that is that it gets there and it bounces. But the more that a support level gets tested, the more likely it is to eventually break. The story actually is more towards Ethereum at this point than Bitcoin. So if you pull up an Ethereum chart relative to Bitcoin, you'll see the full narrative there. And really what seems to be going on here is that Bitcoin is kind of levitating the market above its support level of 6,000, while Ethereum actually is breaking all of its support levels. So I think it's just a matter of time before the weakness in Ethereum manifests itself in Bitcoin and that 6,000 level gets broken.
Yeah. And I've been of the opinion that the crash wasn't going to be over till we hit around that 4,800 mark. Well, that would be the low point. And we've gotten close to it a couple times, but not quite there. You just have to look at the chart. You could figure it out pretty close to that $5,000 mark. It might only hit there for a nanosecond or two, but that's where it's got to go. But then my opinion is it's not really in a bull market. The trend hasn't reversed till it breaks around the 11,000 mark. I don't think the 8,000, 9,000, 10,000 marks are particularly relevant. What's your thought there?
Yeah, I would tend to agree with that. On Bitcoin, I think just making one higher high would make a difference. So if you pull up a Bitcoin chart, you'll see that while 6,000 horizontally has been support, every rally has been sold at a lower point. So you're actually making a series of lower highs. Once that pattern breaks and we actually make an intermediate high above the previous high, I think that'll be our first clue that we might be close to a bottom. The main thing I'm looking at, however, is Bitcoin is incredibly important for all crypto, as I'm sure all of you are aware. But Ethereum is actually leading the way. So with Ethereum, I actually have a double-digit downside target, close to 60 on that. So I'm not expecting really the market to stop, to decelerate until around that level, 60.
Interesting. So, hey, I haven't heard many crypto traders actually say that it's going lower. In fact, you might very well be the first. So,
well, we weren't as right as you. It sounded like you were one day off the highs there, right off the introduction of the CME contract.
Yep.
But we've been pretty bearish on it. We're bearish in the intermediate term, but long term we are very bullish.
Well, I'll throw another one at it. I want your feedback here. This is a thesis I'm working on. Hypothesis. It's not proven true. It's purely speculative. But I believe that the cryptos have now become trading vehicles, alternate trading vehicles for precious metals, and I don't believe that that they will start going up until precious metals start going up. Just a theory I'm working on. I have nothing to prove it. It just seems to me that the people that hold cryptos are starting to be the same people that that hold gold and silver.
Yeah, makes a lot of sense.
Yeah, I don't know if it's true or not. I have no idea, and don't take my word for it, but it's a theory.
No, it makes a lot of sense. The way that Bitcoin has really developed, it's really developed less as a transactional currency. So it's less of a dollar, less of a euro, less of a yen, and actually more like a digital gold. And that's a really kind of played out phrase, but it's completely true. So whatever ecosystem develops from the crypto market, Bitcoin is going to be your way in. And in that effect, it becomes currency for crypto, and then it becomes digital gold, essentially.
Yeah, and there's people working on it now, multi-billion-dollar corporations, mostly in Canada, a couple in the U.S., but working together. Right now, they've got blockchain gold, gold that's evidenced. The storage of the gold is evidenced on the blockchain, which is a great thing because it means that you can have, as long as you have an external audit of the gold that's purportedly on deposit at a depository, it means that if it's on the blockchain, you can be sure that the people who think they own it actually own it, assuming that they didn't just take that pallet of gold and put it to another place and say, oh, well, these people own it, and play musical chairs with the physical. So what they're going to be going towards next, and it's a little problematical because it will be regulated as a security, is gold-backed tokens. Okay, so digitized gold effectively, like you said. And when they do it, I mean, this gold right now is on deposit at the Royal Mint of Canada. So, like if it was the U.S. Mint or Federal Reserve, you would have a little bit of angst. But Canada's never, ever came up with the bizarre notion of confiscating or expropriating gold. So when that happens, I just feel like the entire segment, entire sector of cryptos is going to be stood on its head, and it's just going to change everything.
Yeah, I would agree with that. If you look at paper gold products like GLD, they're basically just a coupon against physical gold that's supposed to be held in somewhere. There's a very good chance that it's actually been, like you said, musical chairs, and somebody else actually has a duplicate receipt on that gold. It's impossible to prove, really, when you have paper products like that represent physical commodities. So in that way, it makes a lot of sense to put the ownership of gold on the blockchain, for sure.
Yeah. So we see things happening. One thing that really concerns me, and I don't know how you feel about it, is the actual number of nodes, Bitcoin nodes out there. It's surprisingly pretty small. It's like under 10,000. And it just seems to me that if you can block access to or shut down enough of those nodes in a very short period of time and just keep them down for, say, a week, seems to me you'd wreak real havoc in the crypto markets. Am I right about that?
Yeah. Yeah, absolutely. Part of the reason that is because of the way that mining works. So as Bitcoin matures in its lifeline, as more and more get mined, it becomes more and more difficult to mine those coins as you get closer to the end, essentially closer to the 21 million total Bitcoins can be mined. So we've mined about 17 million of them right now. So it's significantly more difficult to mine a Bitcoin today than it was even just a year ago. So the way that the mining companies have been working is essentially they've been consolidating, because if they consolidate, they can have more computing power to then do that more complicated mining. So what ends up happening, like you said, is all of these separate nodes end up kind of converging into one single or a couple of entities that can actually move price and move the transactions across.
Yeah, and another thing I was reading, you have these digital wallets, and I didn't mean to get into the weeds on how cryptos actually work, but I think it's really important because the amount of ignorance on the topic, myself included, is staggering. But you can create your own node so that you effectively have your own wallet, so it theoretically at least can't be hacked. And that's probably what people should be doing, because then that would increase the number of nodes out there and further increase the security of the currency. I don't know nodes. I can't believe that Ethereum has more nodes than Bitcoin. Do you know?
It does, but that's because it's easier to mine Ethereum, and there's significantly more in total supply. In terms of protecting your crypto, what we typically would recommend, if you don't want to go the route of being a node, it involves a couple of extra steps for most folks, is just to simply buy a hardware wallet and put your crypto on that, and it takes it offline. So it makes it so that it's not on a computer, it's not on the internet. You can physically store it somewhere, and you can always transfer it back and forth. Yeah, it's a great way to protect yourself.
Yeah. Hey, by the way, as of last year, 2017, there were 25,000 reachable Ethereum nodes. So you're right, it's more than almost triple the number of Bitcoin nodes out there. So, but I just have the feeling there's issues with them. But we're going to find out more about it as mining. With Bitcoin, like you said, the mining's diminishing because it takes so much energy to create a Bitcoin, and the price has been down. It's still profitable in certain places, like in China, in Iceland, and in places, probably in New York City, where large sectors of the city don't pay for electricity. They just tap into lines illegally. If you're not paying for electricity, hey, mining is the most profitable business in the world, right?
Yeah, that helps a lot. China actually has been subsidizing their miners with cheap electricity. So that's why they have had such an advantage. Actually, in the United States, the state of Washington, since they're so close to hydroelectric plants, is actually developing as a crypto hub. So it might start up there and then kind of branch out, but it typically will look for places that have low-cost energy.
Actually, you could probably do it in Texas as well, because Texas is a great place for wind energy, except there's no way to store the energy. So at various times of the day, the utilities literally give away the wind energy because they have no control over it. And it's better to just give it away than it is for people to start looking for alternative sources. And it brings down the overall electric bill. So if you have a couple of windmills in your backyard, and you can tap into them, then it's a great time to be a crypto miner. I bet there are people, Sam, around the world looking at how do we steal electricity to go mining, and I'll bet it's being done at a rate that you cannot even believe.
Absolutely.
Look at the incentives. It's like going to North Carolina or Virginia to buy cigarettes and then smuggle them back to New York, where there's like $18 a pack. It's a little hyperbole, but a substantial tax on cigarettes of like $6 to $7 more per pack. You bring back a trunk full. I mean, I remember my grandfather was a smoker, and they'd stop off coming back from Florida in Richmond, and the whole trunk of the car would just be like cartons of Marlboros. It was absurd. So it's kind of the same thing, of electric bootlegging, right? So if you can steal power then your costs go down to almost nothing. You have labor costs, right? Maybe it's not a great thing. You might be committing a RICO act, but criminals are criminals. They're always looking for an edge.
Yeah, cryptos essentially turn electricity into cryptos. So electricity becomes cryptos. Cryptos can then become other cryptos, or they can become fiat. So it makes a lot of sense.
Yeah, I love the concept. And it brings out the creativity in man. The creativity to do good is unlimited. The creativity to do evil, also unlimited. But looking ahead here, we got to get a more disciplined, more liquid, less shallow marketplace. I know there's big names involved here, but so far the only thing I see these big names doing is driving cryptos into the ground because they're a threat to the monetary franchise that these mega banks are granted courtesy of the U.S. government.
Absolutely. Yeah, that's one of the big risks in this type of space is that you're essentially rearranging the status quo. And the status quo does not go easily. So it's definitely a process for sure. And I think they'll actually take it into the existing paradigm. So what I expect to happen is once we get the pullback to double-digit Ethereum, then I think we'll actually start to see the banks and all of the Wall Street players start to structure product around crypto. It's too soon right now based on simply the price.
Yeah.
But there's too much money on the table for these guys to not try to do that eventually.
Oh, yeah. We're talking about trillions potentially
Absolutely.
on the line. And one thing like Ethereum has kind of become the standard crypto, so we don't have to reinvent the wheel every time there's a new crypto. You just explain how that standard works because a lot of you out there don't get it. And I think it's an important distinction why Ethereum has some value other than over and above what it's trading for.
Yeah, great point. So Ethereum differs from Bitcoin. They're both transactional currencies, so you can send one to someone as a payment, and that'll be just fine. But really, the underlying difference between Bitcoin and Ethereum is that Ethereum acts as a platform. So just to give you a relatable example of what that means, most of us have an iPhone or some device of that kind, whether it's an Android or an iPhone. Ethereum is acting as the iOS for that device. So Ethereum is the iOS that runs the device. And then when you go buy apps, you don't have to think twice because you already know that app will work on your device because it's running iOS. So Ethereum, it kind of acts as the base level, and then you can actually layer on other blockchain technologies on top of it so that it can run on the Ethereum network.
Right.
Bitcoin doesn't have that capability. They're trying to scale it to do that. I don't see it going that direction. I think Bitcoin will remain mostly a store of value and a transactional currency. But if they can start writing in smart contracts like Ethereum has, that would be pretty big.
Mm-hmm. Interesting. Yeah, well, I think you're right. I mean, it just makes sense. And there's a lot more Ethereum nodes out there, which is really an important matter because there are going to be people who they're going to look. Do you remember, was it last year, your DVR got hijacked and then they used it to do all these DOS service attacks for like 6 or 8 hours. My DVR, I couldn't do anything with it. I knew something was wrong because I was trying to hit the skip commercial button and it wouldn't work. It was really aggravating as hell. And, then it came out that day that millions of DVRs had been hijacked. So, who knows what else? They might next hijack refrigerators, Samsung refrigerators, to attack the nodes. It's really, really scary. So anyway, let's see what happens. So people want to find out more about you. We have that website, simplertrading.com. You write any articles or is there any of your work we can take a look at?
Yeah, if you go to the simplertrading.com website, you can go to our blog, and any articles I've written are there. Most of my stuff is actually on the Simpler Crypto site, which is just a branch of Simpler Trading. We have daily videos of what we're trading. So if we have any trade ideas, we post those as well. And we typically will just, like next tomorrow, we're doing a member webinar for long-term price analysis. If I can kind of bring that up very quickly here, In terms of long-term price analysis, we do have a double-digit target on Ethereum, roughly $60. My first initial downside target on Bitcoin was 4,300. So the idea is that folks shouldn't really shy away from lower prices. And the reason that is because the way that the crypto market developed, it developed so quickly that it essentially became too excessive in terms of price. And if you look at a chart, and it sounds like you guys are into the technical, so I appreciate that. Each wave has to be undone, essentially. So if you think about the psychology of the market as waves, there's about 3 waves in Bitcoin that need to be undone. Right now, we're in the process of just undoing the last wave, which is the most impulsive wave. If we just undo 2 of the 3, I think that puts us in a more sound position to then build up the market. A really comparable situation is something we all went through, which was the dot-com bubble. Okay. So in the exact same way that the dot-com stocks just rallied for 1,000%, and then they crashed, and all the companies essentially that weren't making money or that had bad ownership were cleared out, and then eventually it all developed and broke the all-time highs. That's kind of what we see happening in crypto. Interesting.
Well, I think you're onto something anyway. Like I said, just send us some emails. We love getting them. And you can find out more about us at financialsurvivalnetwork.com. Sign up for a newsletter. Also, while you're there, hey, go to the Twitter feed at Kerry Lutz, post, comment, direct to us. We read them all. And our Facebook page is Financial Survival Network. And Sam, been great having you on. We will definitely talk to you again.
Sounds good, Kerry. Great to be on.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.